What's going on, guys? Jay here. In this video today, I'm not only going to talk about the best indicators you need to trade smart money concepts, but I'm also going to give you the reason why those indicators are so important and critical for your trading success. I don't think anyone has done this in our space yet, so I'm glad to be the first one to bring you this value. At the end of this video, I'll show you something that I've never talked about that will provide you with a lot more clarity in tougher price action situations. It's going to help you win more trades. Guaranteed you'll learn something here today, so please stick around. Here are the 4 things you absolutely need to see on your charts to be a successful smart money concepts trader: liquidity, direction, velocity, and take profit targets. Indicator for liquidity: identify the right liquidity sweep. This was my number one problem as a new trader, and it is for a lot of people, is which one of these levels is the correct liquidity sweep. The markets are fractal, so this is extremely hard to define. ICT talks about the levels he looks at in his One Trading Setup for Life video. I'm linking that video up top now. You can watch it after. My levels are a bit different, and yours may be as well. What we all need to have in our arsenal is an indicator that defines and identifies a very high probability reversal level. You need an indicator that can draw the level at which you start looking for your setup. That's step number 1 for any smart money concepts trader. Wait until the market provides a sweep of liquidity. So here are 2 indicators. You have the session range highs and lows. This is a private indicator that was custom built. It's available on my website, and it was designed specifically for the strategy that I use. If you want to use something else, you can use Sessions by LuxAlgo. It's really good. Make sure you know what defines your reversal level based on your stats and plug that information in the indicator. If you don't do this, you'll never know when it's a good time to start looking for a setup, and you'll be staring at the screen all day, and I don't think that's what you guys want. Here's a pro tip. Just set alerts at those levels and sit on your hands until you get the notification that it's time to look. Indicator for direction. Jump on that train, but not too early. How do you identify direction? Think about how price moves. It swings highs and swing lows. To confirm a move up, it's a swing high plus a higher high. For a move down, it's a swing low plus a lower low. There's nothing else to it. To identify swings, there's a great indicator called fractals. Fractals can be defined as turning points or swings created by either 3 or 5 candles. When a fractal gets broken with a candle body, this is confirmation that price has moved in that specific direction. There's 2 indicators that I want to share with you. The one that I use is called Fractals by Rachel T, and I'm using the default settings for the indicator. If you don't want to use that one, you can use Market Structure by Nephew Sam, which has more information built into it. That is also a really good indicator. If you don't use fractals or something to identify break of structure, change of character, you would have to rely on a more lagging trend indicator like moving averages, for example. With smart money concepts, it's going to be hard to achieve the desired level of precision that we want with lagging indicators on very low time frames. If you like the video so far, please hit the like button and subscribe. It helps us put out more free content for you on a regular basis. Indicator for velocity. Jump on the train when it's accelerating. With direction only, you could still be stuck in a trade for a very long time if the market is consolidating or slow grinding. I think everyone would agree with the fact that it's better for a trading to get to destination as quickly as possible. Slow price action tends to play with our minds and make us do bad things. There's a way to see if the markets are accelerating. Bigger candles means stronger price movement for a unit of time. That's called strength. But fair value gaps create a pricing inefficiency that is a telltale sign that price is accelerating in that specific direction. They show you speed. A fair value gap is an inefficiency created by the space formed between 3 candles. This is a sign of quick acceleration. Speed combined with strength is a high probability combination for movement. Here's 2 indicators. FVG by Nephew Sam, that's the one that I use. The session range highs and lows indicator also has built-in fair value gaps if you want to use that one. If you don't use fair value gaps to identify velocity, you have to rely on a more lagging trend strength indicator like the average directional index or ADX. Again, on lower time frames and for indices, this is a method that offers less precision. Indicator for take profit targets. Reaching a smart money destination. The markets move from one liquidity or inefficiency level to another, that's all. Everything else is nonsense. And those are ICT's words. You should already have chosen an indicator for high time frame liquidity level sweep, one for swings and one for fair value gaps. So you already have the information for smart money take profit targets. When you're in a trade, go one time frame higher and mark out the next fair value gap, fractal, and session high or low. And voila, that's where the market is going. It's going to hit one of those levels. Here's a bonus indicator. Inversion. This is the ultimate fake out detector. When price moves aggressively in a counter trend direction and prints fair value gaps, it's important for those fair value gaps to remain present on your screen after they've been rebalanced so that you can see acceleration in fair value gaps pair up and confirm order flow again in the other direction. So when that occurs, it's called inversion. To see this happening, you need an imbalance indicator. You can type in imbalance in the search bar. A good one is by Lux Algo. The one that I use isn't available anymore, but it's essentially the same thing. I like to use this on the 1 minute and 5 minute timeframes. It will improve your win rate significantly. So when you see a fair value gap go in the opposite direction of order flow, once you see an opposing fair value gap build on the rebalanced fair value gap, that's your sign that the market has provided you with a fake out or inducement and now is building up in the same direction of order flow that it had before. If you're equipped with all those smart money concepts indicators, you're going to crush the market. You have everything you need and more. I would suggest sticking to those types of indicators and not overdoing it so that you can have visual and mental clarity when trading. Less is more with smart money concepts indicators. If you learned something today like I promised you would, please do me a favor and smash the like button. This is what motivates us to create more future content. If you have amazing indicators that you'd like to share, please mention them in the comments section below. That's pretty much how we learn about them and that we can share amongst each other and our community. Thanks for watching and have a great day.